There is a new financial system that is buying thousands of Bitcoin every single day. And even most Bitcoiners haven't grasped the full potential, what this actually means for Bitcoin, because this is going way beyond MSTR strategy. And this is what we are going to talk about with today's guest, Simecka. And at the very end of the episode, I got a little bonus for you because so many of you have asked me to cover PIP 110. So at the very end, I'll dive into this topic with Adam. Enjoy.
The magnitude and the scale of what Stretch is doing, I think, is just far beyond what people can currently comprehend.
How do you look at strategy and what they're doing? And are you bullish, bearish? What is your long-term view on the stock?
Well, let me give a very high-level overview before we lose too many people. They're like, what is all this stuff? I don't know what any of these things are that these people are talking about. I'll just kind of explain from a really high level what this all is, and also kind of where I'm coming at or where I'm coming from with my personal experience and how I'm, looking at these things. So there's a company called Strategy, if you're unaware. It was the Michael Saylor company, if you know who that is. Big Bitcoin company. Phong Le is currently the CEO, and Michael Saylor is in charge of their Bitcoin strategy. But essentially what they do is they acquire Bitcoin. So they are I call them a Bitcoin acquisition company. They have a lot of unique strategies in how they acquire the Bitcoin. And I alluded to one earlier called Stretch, or STRC, which is the ticker. And this is just one of their products. So their main common stock, like if you were to go buy Strategy common stock, just the regular stock, that ticker name is MSTR. So the company used to be called MicroStrategy. I'm sure most people watching this know that, but in case you don't, it's just that they have a common stock. But they also have other products too. And the one that I'm talking about and referring to that I think is the most interesting to me right now is called Stretch, STRC. So we have a company and they sell stock, and they have their common stock, but they also have other securities that they sell and offer too. One of them is Stretch, STRC. So Robin, you were talking about Strategy. You're like, this is interesting to me in buying their shares. You're probably referring to their common stock. Am I right? Yeah, okay.
Yeah, absolutely. I'm not that interested in Stretch. Stretch is interesting, not because I'm interested in it. It's interesting for onboarding a lot of other people and a lot of other capital.
I totally agree. So for the record and full disclosure here, I do also own some Strategy MSTR common stock. I own it inside of a retirement account. So people are like, well, why would you ever even waste your time on something like Strategy when you can buy Bitcoin? And to the people asking that question, I would say, that's a very valid question. I'll tell you why I have some Strategy. Again, it's in a retirement account. I have some Strategy because I can buy Strategy in that account, and I can't buy real Bitcoin, right? So MSTR is not Bitcoin. I do see it kind of as securitized Bitcoin. It's Bitcoin with all of the, price exposure, or not all of it, but, potentially, I guess I should say. There's still some risk involved there, but you get exposure, price exposure to Bitcoin, meaning if Bitcoin goes up, your MSTR stock should go up too, and usually go up more and faster. So that is why some people are interested in it. Now, I'll just say from in my personal opinion, this isn't necessarily personal financial advice, but I don't see too much reason for somebody to sell Bitcoin and buy MSTR or really any stock. My opinion is if you have access to real Bitcoin and you can buy Bitcoin, that's the thing that you want. That's the thing they want. So why not just do what they do? You know what I mean? So that's my point on that. Now, there are reasons, like my example, where I can buy some of this stock, but I can't buy real Bitcoin. And in those cases, it might make sense to consider, buying MSTR. And the reason is when you buy MSTR or any of these offerings that they have, what they're doing with that extra money is they're actually buying real Bitcoin with it, or at least so they say. So, there is some level of trust there. They don't publicly disclose their, on-chain balances like some people do. Now, obviously, you can look at some of the chain analytics and figure out where a lot of their Bitcoin is. Personally, I'd like to see them publicly make that disclosure, but for whatever reason, they've decided not to. And I think that there might be some small arguments for why it's a good idea not to, but certainly, in my opinion, the good outweighs the bad. I don't think it's really that much of a risk. You have a lot of very high-profile institutions and even governments that are disclosing their on-chain Bitcoin balances. It's really not hard. I mean, it's super easy, and it would provide a lot of transparency, and I think just confidence as well. So that would be my recommendation and preference. Not that I have any control. Yes, I'm a shareholder, but I'm not that kind of a shareholder. To put things into perspective.
Yeah, I think a few people are, but it's interesting because when I set my foot in like Fong Lee's or like Sailor's shoes and think about the decision, should we implement something like that or not? The only reason why I would do it is to bring more trust to my product and service, because like Stretch and Strategy are both very much trust based. So like if people trust Stretch a lot that they can deliver the yield, they can deliver on the promise, and it gets long-term good results, then they will get a lot of money. And it's already fascinating how much volume they have after like a product that's 5-6 months old. Stretch is not that old, maybe older than 6 months. I don't know exactly, but it's in their first year. But something like that could potentially increase trust. But the question for me is like, how many people actually care for that? I feel like those people that really care for like this public transparent ledger of Bitcoin implemented on the strategy side are most likely those who anyways prefer having like 90, 95, 99% of their wealth anyways in self-custody. So I think that's also maybe how they look at that. Because I agree, I would love to see publicly how much Bitcoin they actually, like a proof of reserve kind of thing, where they just show like that's how many Bitcoin we have. But if just think about the incentive structure, I'm like, is there a huge incentive for them to actually do that, or they going more of? Or they are going more for the TradFi money, and they're going more for the money that values them being credited by the S&P and other credit agencies and all those sorts of things. And they have those credit rating agencies, and I think two of the big fours that, how's it called? The once a year kind of thing that they always look at all the financials. I forgot the word for it. But yeah, like they have to get no, it doesn't matter. But basically, audited. They're getting audited from like big corporations. Also, like this is probably their number one focus now, because the TradFi lens are looking at that specific things. And it's only the hardcore Bitcoiners like us that actually care about like proof of reserve, which is, I hope still that they do it. I think it would be amazing, and it would be showing more trust. I don't know if there's any regulatory things that they might have to be careful for, like showing the Bitcoin movement, but they anyways are already quite transparent. They would not need to disclose every Monday how many Bitcoin they bought last week. So they do that, I think, optional. Like they could also wait for the quarterly earnings, as far as I know. And so, I think they should do it, but I don't think they will in the short run.
Yeah, and I'll just say, like, I don't think it's like that big of a deal, even because if they do do like a proof of reserves thing, that doesn't necessarily guarantee anything either, right? Neither way is a guarantee. It's a nice, assurance and confidence boost, but it doesn't measure any kind of derivative that could be placed on that, on that balance on the treasury. So, it's a partial, confidence boost where you can see that the Bitcoin's there, it exists, and they likely have the keys, and that's helpful. But again, it doesn't necessarily guarantee that they don't have liabilities that you don't know about, right? So that they could still do shady stuff. It doesn't necessarily mean that they can't. They could no longer do anything shady. Not that they are doing anything shady. It's just if they do have it, publicly disclosed on the public blockchain, we can usually see a little bit more, which is, Bitcoiners appreciate. But I like your point that that's really kind of a Bitcoiner thing. The public capital markets don't care so much for that, nor would many of them even know how to use a block explorer. So it's probably not that big of a deal, either way. It's just one thing that I would like to see as a Bitcoiner and a strategy shareholder. I would like to see both, but it's not a deal breaker for me, obviously, because I'm still a shareholder.
Yeah, it's. I think it's. A sailor probably looked at it and said, like, okay, 1% or maybe care about it, and it's a very loud group on Twitter. So I don't really care about it. And I think that's the end of the discussion there for strategy. I don't want to put any words in his mouth, but like I could imagine that.
I want to circle back real quick because you said something that I wanted to expand on, and we were talking a little bit about Stretch, but you said it's not something that's necessarily super interesting to you, but it is interesting to see as kind of a normie or onboarding type product. And so I want to like talk about why I'm interested in Stretch and also why I don't own any either. So yeah, I don't own any Stretch. I don't think that if you're watching this right now, the chances are, you're probably in a category where you'd benefit much more from just buying Bitcoin, or even MSTR, if you wanted to get some kind of security, publicly traded stock. Stretch is more akin to like a bank account that pays you a very high yield. So it's kind of like a high yield savings account, but instead of paying like 4% or so, you're looking more at 11 or more. Right now, at the time of recording this, it's 11.5. So 11.5%, and paid annually. You actually get monthly payments. So 11.5% divided by 12 every single month. So if you put, $100 in, you get, 11.5% of that over the period of a year. Now, why do I not own any, and why am I so excited about it? Well, first, a lot of people see that, and that's really attractive to people. 11.5%, that is pretty much unheard of in traditional capital markets. That's way, that exceeds, public bonds. That exceeds pretty much every private bond out there, that are, by the way, way more risky than Stretch. So Stretch is what's called a preferred equity. It's a preferred share of strategy. So strategy themselves essentially back this product, and there's a lot more that backs strategy. In the case of a major event where they would need to start liquidating some things. So there's basically a hierarchy of preferreds, and Stretch STRC is the top one is Strife, so that's STRF. That is the highest preferred. So that is the last one, or I guess the first one to get paid. So the least risky, right? That means everything below it has to basically fail and get liquidated first. So Strife is at the top, and then we have Stretch. And then it's Stretch. So Stretch is number 2. Is that right? I think that's right. So Stretch is number 2, and then you have Strike below that. Then you have the Stream, which is the European Stretch, and then the Stride. So those are all the preferreds, and they go in that order exactly. So STRF, STRC, STRK, STRE, and STRD. So I know I'm a lot of acronyms there, but that is the order in which the preferreds are ranked. So, and then you have the common at the very bottom. And then underneath all of that, you have a massive treasury of Bitcoin. And then underneath all of that, you have a massive treasury of US dollars. So there's a lot backing these preferreds. So in order for things to go catastrophically wrong, they would need to run out of cash. They'd need to run out of Bitcoin. They need to run out of their common stock. They need to run out of Stride. They need to run out of Stream. They need to run out of, all these other things would have to get paid out first, last. So Stripe gets paid out first, and then Stretch gets paid out second. And they would sell off everything before that if something happened. So they're extremely collateralized. They're well over collateralized. And so if you look at the collateral, which I don't have the numbers on hand, but in terms of how collateralized these products are, they're significantly more collateralized than basically any other type of a bond product in the private market. And I would even argue that Stretch specifically is potentially less risky than buying a government bond right now. So, if you buy a government bond, you're basically, assuming that the government's okay. And there's a lot of faith being lost in the government, in the treasury market right now. So that's one of the reasons why Stretch is currently so successful. So we have a lot of major institutions. We have funds and even sovereigns that are potentially looking at putting some Stretch into their, on their balance sheet, so to speak, or into their treasuries. And they're subsidizing their government that with Stretch right now, because it's becoming de-risked, and two, it's such a high yield rate. I mean, it's 11.5%. It's really hard to beat unless you buy Bitcoin, right? That's how this whole process works. Without Bitcoin, exceeding that 11.5%, then Stretch doesn't work anyway. So that's why I say, like, Stretch is awesome for people that don't understand Bitcoin. If you understand Bitcoin, my opinion is, just buy Bitcoin, especially if you can hold it over the long period. There's one exception though. And I would say, like, if you need like short-term capital, maybe you're like, I don't know, maybe you're retiring and you cannot deal with volatility, maybe Stretch is a good option. Or if you need to, hold something, in some type of a contract or something that you have to maintain a level US dollar value, Stretch is also a good option for that too. But for the most part, if you're just seeking the yield, I know what I'm doing. I'm buying Bitcoin.
I want to show you this. I think I showed it briefly before because I think this is really interesting. I also want to get your take on him calling it digital capital. Would you do you agree with the word capital digital capital for Bitcoin? Because there's a lot of nuance to it. I personally see Bitcoin as money. But you can also call it capital. You can also call it an asset. You can go in all those different directions. Do you agree with the name of digital capital for Bitcoin?
I don't agree that is the case, but I don't necessarily disagree with him taking that stance either. I think that, Michael Saylor takes a lot of arrows, and I'm very glad that he is helping take a lot of the negative pressure off of Bitcoin, as a disruptor to the US dollar. I think, that's kind of the last thing that we need, is for the general sentiment around Bitcoin being that it's basically crashing the dollar. It's not, but Bitcoin is that flight to safety, right? Bitcoin is where you go as the dollar starts to fail. So I don't agree with the fact that, it seems, I'm not going to speak for Michael Saylor, but, just based off of, the assumption that he is saying that Bitcoin is capital instead of currency. I don't agree with that personally, but I'm perfectly okay with him taking that stance with the amount of exposure that he has and how many eyes are on him. Because, like I said, we're in a transition period right now where the dollar is losing relevance and people are fleeing to something that isn't controlled by any central party, and that's Bitcoin. And so I think that it's fine for that heat to be deflected to some degree. But I'm not going to stop calling Bitcoin money. I'm not going to stop using Bitcoin as money. He isn't going to call it money, and that's okay. I'm okay with that. But yeah, does that answer the question?
Yeah, which is funny because I've heard him on multiple occasions. I think him even calling it money. I think he even said currency once to Bitcoin. If you listen to a lot of podcasts, but like mostly he refers as digital capital. It depends on like where he is, and I mean it's I think it's also a fair assumption. It's not just like, oh, it's digital capital, especially in his hierarchy.
Well, that was also probably a little earlier on, right? In some of his appearances. I think that he's changed his tone. I think it was very intentional. I do think that he understands. A lot of people think that he's, just some kind of, paper Bitcoin, and all he's doing is trying to, sell snake oil and, sell his stock and doesn't really care about Bitcoin. I don't agree with that. I think that a lot of the things that he does and says he does with a very specific intent and purpose. And it's not necessarily to win over the Bitcoin crowd either. I think that there's just underneath the surface. I think he understands on a very intimate level, what Bitcoin is and what it's doing, but he is very cautious with the way that he presents that to the rest of the world and his audience. So, I understand where he's coming from with that. I'm fortunately in a position where I don't have to worry about that. I can say what I want to say, and not be worried about the overall perception of Bitcoin, because believe it or not, or whether you agree with it or not, Michael Saylor's opinion on Bitcoin matters to a lot of people. In terms of how people see Bitcoin, right? So when people think of Bitcoin, when Michael Saylor says something about Bitcoin, it has a profound impact to a big portion of the world. He's probably the most popular Bitcoiner on planet Earth, and so when he says something about Bitcoin, people listen. And I'm okay with him taking this stance. I think there's even an argument to be made that he needs to be taking this very corporate, digital capital type stance. Bitcoin's not necessarily money. Bitcoin doesn't threaten the dollar. All of these things to make people feel safe and comfortable for the time being, while people like us continue to build and promote Bitcoin as, the ultimate form of money.
It's kind of the Trojan horse, even like if you want to introduce Bitcoin as money and threaten the US dollar and threaten the euro and threaten the yen, you wouldn't call it, hey, here is a threat and we will destroy you. like it wouldn't be smart to make the biggest spokesperson that get the most eyes and the most respect also from the TradFi crowd. It wouldn't be smart from him to say that, even if he wants that, even without speculating what he really wants with Bitcoin. But I think the argument that I sometimes hear, he just wants to make money, is a little stupid, because he had already before a lot of money and he was ready to retire before Bitcoin. Like it was very clear that how he structured his business, the transition to Fong Li started way before he even discovered Bitcoin. Like he was kind of ready to retire. And he mentioned it even on my podcast 1.5 years ago, because he got that question from the next guest saying, what is the most valuable thing that you have that you can't buy with money? And he said a mission, went on to explain like how he was ready to retire before Bitcoin came into his life. So there is something truly that like actually excites him about Bitcoin. Because if it would have been just about money, I don't think he would be doing all those things now. He could just, like, obviously it's a not a fulfilled life, just like sit on a yacht and like not do anything. But he could do a lot of other things. Like he don't need to be the Bitcoin salesman. So I don't buy that argument of like he just does it for money. But yeah, I would be curious, like what really drives him to push the Bitcoin forward. He might be more of a Bitcoiner than we give him credit for sometimes.
I agree.
If you live in Europe like I do and want to buy Bitcoin the right way, check out Relai. Relai is a Bitcoin-only platform with no distractions, no shitcoins, just a BTC. It's also the easiest way I've found to do what actually works, buying Bitcoin on a consistent basis. Relai is also self-custodial. They never have the keys to your Bitcoin. No freezing of your assets, no counterparty risk, no rug pulling whatsoever. I have been a long-term fan of Relai, not only because it's incredible, easy to use and very beginner friendly, but also because it just works. If you want to get started with Relai today, click the link down in the pinned comment or in the description. And once you have downloaded the app, type in Robin in the referral code section of the app to save 10% on fees. So set up your DCA Bitcoin plan today with the Relai app and get cheaper Bitcoin if you use code Robin. With Microseed, you can engrave your 12 or 24 word seed phrase, the entire seed phrase, onto a 1-inch small washer. Yes, just one washer. All 24 words on that one washer. You can hide that thing everywhere. And even better, you don't need to buy a new kit every time you have to get a new wallet. You can make unlimited backups because Microseed is not selling the washer. Microseed is selling the device that stamps the washer. So you get the full kit with the device, with the washers, with the hammer, with everything you need to get started today. And you can make with that unlimited amount of backups. Go now to microseed.io. Finally, we have BTC Prague back in 2026. And this year, I'm not only speaking on a panel, but I'm actually going to present an interesting new angle, a perspective, a Bitcoin thesis at BTC Prague this year for the first time ever. I've never done that on any other conference, so this will be a fun one. If you listen to this show on a regular basis, I would love to meet you in Prague this year. It's very high signal, no noise, and Prague is just a freaking amazing city with awesome drinks and a lot of good food. Use code Robin to get 10% off, and if you buy with Bitcoin, you get an additional 5% off your ticket price. I'll see you there in Prague. Make sure to come say hi.
There's also a resource I'd like to point people toward. If you haven't seen Michael Saylor's keynote speech from the Bitcoin conference in Las Vegas last year, it's really good. First of all, I would recommend watching that. But there's a lot of what we've just been discussing was in that speech. I think that there's some Easter eggs in there, and he really, I think, speaks in a way that explains why he does what he does. And so if you just listen to that, I think, if you're on the fence like with Michael Saylor, especially from a Bitcoiner stance, and you think that he's just this, snake oil salesman, so to speak, you watch that video, I think you might change your mind. Yeah, well, I'll leave it at that.
Is that the one that was 21 ways to get wealthy or something like that?
Yeah, 21 ways to wealth. Yeah.
I remember seeing that last year. Looking forward to Vegas also this year. Like I got distracted. I wanted to show you this one actually. I got distracted by the words digital capital. There you go. I actually wanted to show this because when I saw this, Stretch, MSTR, and Bitcoin and the ecosystem that he's building all of it made sense for me now. I mean, Bitcoin made sense for me before, but digital credit and digital equity and how he frames it, I heard him talk about it before. I'm a very graphical kind of a guy. I need to see something like on a graph, on a scale or something like that. I can't do it just with words. And as soon as I saw that one, I was like, wow, that's how strategy outperforms Bitcoin, because I was never sure like how will they substantially do it in the long run. And so give me your take on it, on like digital credit, them paying out the 11%, and basically that's what most people want. And the digital equity is kind of like for more the volatility junkies like myself that say like, hey, I'm okay with 50 wall, 40 wall, 60 wall if I get 100, 200, 300x over a very long period of time. I mean, I made yesterday actually funny calculations where what if strategy can get to about 1.5, 2 million Bitcoin, and Bitcoin is at like $10 million. Like it gets ridiculous at those price levels, what strategy can actually get towards. I'm just curious how you think about those three things with that graphic.
So Michael Saylor has been pretty clear about this for a while, about his plan to essentially extract the volatility out of Bitcoin in certain ways. So obviously, as we know, Bitcoin in terms of US dollars is extremely volatile. The price goes up and down quite a lot, quite frequently. And that, comes, that comes with a price. But the benefit of something like that, Michael Saylor even says it himself. He says volatility is vitality. And what he means by that is he's able to essentially put a bridge rectifier into the volatility of these products and take this wave that's coming in and out and make it something that's consistent. And so this is exactly what he's done with digital credit. He's extracted the volatility out of it, and he's done that with the upside. So as you can see, at the top here, I'm assuming this digital equity is reflecting something like Bitcoin, right? I'm not exactly sure what this graph is referencing, but that orange line.
Oh wait, I can give you this. The digital capital is Bitcoin, and digital equity is strategy.
Oh, okay. All right. So, well, let's just ignore the orange one for a minute then. So the digital capital one being Bitcoin, as you can see, it's still quite wavy. What he's able to do is he's able to basically, collapse that waveform into a straight line. So that digital credit is I call it a stable coin. That's essentially what this is, Stretch. So imagine this light blue line. This is Stretch, right? You get this 11% plus yield with none of the volatility, right? It acts like a bank account, like a savings account. You put your money in, it pays you a yield, and then hopefully you can pull your money back out, and you would want that money to be the same amount that you put in that you can get back out, just like a bank account, right? So you put on $100 one day, someday in the future you can pull that back out, the $100, you still have that preserved capital. And while you keep that money in the bank, they're paying you a yield. So again, it acts a lot like a bank account. It's not specifically a bank account. It also acts a lot like a bond. It's also not specifically a bond, or technically speaking, it is a preferred perpetual security. It's a stock, but that's how it behaves. And so Saylor's been very vocal about this process for many, many years, even before Stretch existed. He wanted to build out these products that offered varying levels of volatility that are essentially created by arbitraging the rate difference, right? So if Bitcoin's growing at 30% ARR, what he can do is he can take the difference between whatever he's offering on Stretch and the growth rate of Bitcoin over time, pocket that, and that's how he can offer this digital credit with basically no volatility. And this digital equity here at the top with this being MSTR, I think this is just, historically speaking, MSTR has been, amplified Bitcoin, right? In the down markets, it's gone down further and faster. In the up markets, it's gone higher and faster as well. And so you have, almost kind of this leveraged Bitcoin play on top of Bitcoin, and you also have this, digital credit, which is this flat line. There are different points in here where you could also measure with some of the other preferred stocks. I personally find them less interesting than Stretch. I think Stretch is kind of really the one preferred to end all. It's like the one ring to rule them all. This is the perpetual preferred that I think is really going to change the game. I've seen people call it the iPhone moment. And I think this is really, this is it. This is all that they need. I'll also say, as I, started seeing strategy come out with a lot of these other products before Stretch, I started talking to my friends about a product that would basically behave just like Stretch. And I told them if Saylor can do this, like, it will completely change the game. And then he did, like, a few weeks later. And I was like, that's awesome. Like, this is it. This is the moment. And I think that that's shaping up to be true, especially as we're seeing what Stretch did this week. Like I said, most of the world, I don't even think has figured out what's going on with Stretch right now. I think it's a sleeping giant. Well, it's not even asleep anymore. It's just people haven't seen that it's this monster. So anyway, I got a little carried away there. I hope I answered your question.
100%. This is that's why I'm also getting excited about strategy these days. But yeah, I have to. I will drop probably in the next like 1-2 weeks an interesting video, hopefully explaining exactly how I think about it, because I have so many thoughts, and I'm now thinking about how can I distill that down in 15-20 minutes so people understand it. Every time I talk about it, I tend to need like 2-3 hours because I'm super excited about it, but I'll leave it at that. I have a few more on that topic. You talked about your pension fund having MSTR in there. If you are a hardcore Bitcoiner, you might ask yourself, and I got that question actually quite a lot already, should I buy not spot Bitcoin because it's like kind of hard to get in pension funds, especially with self-custody, but I could buy like an Bitcoin ETF, like an IBIT or something like that, versus MSTR. How are you thinking of, like, if I don't get self-custody anyways in a pension fund, would I rather have the IBIT versus like the MSTR?
Yeah, I mean, I think that that's going to come down to each individual's decision. There are a number of reasons why I made the decision I made. The first one being when I first bought Strategy, it was before the ETFs existed. So that was, an automatic disqualifier for me for the ETFs. But I also personally, this is total opinion based. I think that Strategy is way more interesting in the sense that they can do a lot more things. Like, they can do things. ETFs can't do things. They're all they can do is hold, the asset and charge a fee. They can't do anything else. Like, they can't do these preferreds. They can't do, take on debt. They can't do any of that. Michael Saylor, Strategy, Fong Lee, the crew over there, they can do a lot to add value to what they have with their Bitcoin. They could pivot at some point if they needed to. There are a lot of, things that they can do to continue to add value to, their stock. And so, yeah, I mean, that's kind of really what it comes down to. I don't think that, it needs to be, super scientific. I think that what it needs to be is just everyone should do their own research and figure out what they want out of their own portfolio, especially if you can't buy real Bitcoin. Because I would just say, if you can buy Bitcoin, just buy Bitcoin. If you can't buy Bitcoin, then just, figure out what works for you. I like the fact that I can give my fiat, investment products, that value to Strategy, and then Strategy can use that to essentially, fix the money, right? They can short the dollar, which is essentially what they're doing. They're never going to call it that, but I think that, there is an idealistic component of it too. Like I like being able to give my ammunition, my fuel to strategy for them to do what I would do if I was in their shoes, and that's just to buy an insane amount of Bitcoin.
They just open up a black hole for fiat to go all into Bitcoin. That's how I also look at it from a big perspective. I guess there's always there's a lot of concerns around Bitcoiners looking at strategy. One that I also get more and more the more I talk about strategy is the fact that they own a lot of Bitcoin, like the concentration of wealth in one hand. I'm not sure if I'm worried about that. We have the same thing with gold. Gold is like, I don't know, like 20% owned by the United States, something like that. Like we're very far away from 20%, but it is something to be talked about. Like they own already 3.5% of the supply, and I can imagine them owning 10% of the supply. Like 2.1 million Bitcoin sounds crazy, and I'm not sure if they get there, but I wouldn't rule it out for them to be able to get there in the long run, especially with if they continue to innovate with Stretch and those products and just like get so much money from the fixed income market, from TradFi, from businesses. I mean, even competitors buy Stretch. Have you seen the Strive announcement that they buy Stretch, even though they have a competitor product with SADA? that was hilarious for me.
Yeah, it was interesting. It was also, I found it kind of humorous as well when I first read it. I'm like, well, why are they doing this? And I put some thought into it. And my current understanding, from a layman's perspective, is that what it did is it significantly de-risked their own product, right? So now, let's say SATA, SATA is at, I don't know, 12 point something percent. I don't know the exact figure, but SATA is the analog to Stretch. So Strive and Strategy are two companies, and each have a perpetual preferred stock that they offer that are similar in function. And SATA is the one that's offered by Strive. And it is a higher rate than Stretch. But what they can do is they can offset a lot of that risk for that product with Stretch. And so they can basically use a lot of the collateral that backs Stretch as a backstop for their own product, right? So now they only need to worry about the 1.5%, whatever that difference is on the first $50 million, because that's how much they bought. So on the first $50 million of SATA. So it de-risks SATA significantly. And I think that's really why they did it. It also helps probably with their risk profile for things like potential future credit ratings and stuff like that. So it is kind of interesting to see. It's like, well, why are they buying somebody else's product when they have their own that they offer? But I think that's why.
Yeah, I just saw, I think it was British Hodl's post where he said, I don't know what he said, but like basically he predicted that all the other products that are directly competing in the US market with Stretch will eventually fall into Stretch. And now seeing SATA, like Strive, the company, buying Stretch and like kind of having the first thing of like, yeah, they're literally falling in there was just interesting. But I guess it's probably a market where the winner takes most. Maybe not all, but like the winner takes most. Like I think if this is a successful market, I see Stretch having like 90% of the market, and then maybe 2-3 other players having like 10%, something like that. So, like search engines, like it will end up being a winner takes most, because now what they are doing, they have the higher volume, they have the more stable price, and they don't have to compete with higher yields. Like they get the higher volume, the bigger brand recognition, the bigger brand recognition, the higher volume with lower yields, which is kind of like, yeah, you just it's hard to compete with that in the long run.
Yeah, I think it's, in my opinion, it does appear that strategy has created somewhat of a monopoly with their products. So yeah, there's definitely a case to be made for both sides, and I think we can all at least do some research to figure out, if you don't already feel like you have a good opinion of or understanding of what Michael Saylor's opinion is on it. But I think we can all kind of make some interpretations on how he feels about it based off of his interview that he had with Danny Knowles recently. So I'm,
It's
I'm not gonna I'm not gonna drive that one too much further. But yeah, if you want to know what Michael Saylor feels on that subject, you can maybe watch that. I don't know.
it was a fun one. I think it's already, I don't know, like 2 months old at this point, but like it was definitely a fun one to watch, the latest one with Danny Knowles on What Bitcoin Did with Michael Saylor. I think it's the first What Bitcoin Did episode I watched where Danny was the host, and I don't regret it. It was an entertaining one. I
It was
didn't learn a
entertaining.
lot, but it was an entertaining episode. That's for sure.
Yeah, it was. Yeah.
One more question on the stretch. I didn't want to stretch the topic so long, but now I wanted to have like a button where I can press this, like the effects. But how do you think Bitcoin will scale over time, knowing how popular stretch is? Because I always thought like Bitcoin can scale like self-custodial and all of those, but I think most people just buy product like stretch.
Yeah, I mean, I think that this really changes how I've been looking at not really like the protocol, right? Bitcoin, the protocol of Bitcoin remains completely unchanged, but in terms of adoption and price action, like I think this really changes everything. Um, I would say like a year ago that my thoughts and belief about what something like Stretch could do would have been like, it might have some type of an impact, and I think a lot of people are going to be excited about it. But after this week, man, Stretch is buying like 5,000, 6,000 Bitcoin a day right now. It's insane. I mean, if they buy at this pace, they're going to be buying like over a million Bitcoin per year, which they're not going to. But that my point is, if they're buying 5 to 6,000 Bitcoin a day, they're going to get to over a million Bitcoin in a year if they could theoretically keep that up. Yeah. So it's just, I mean, there's only two ways this ends. Like either something has to break, or Bitcoin goes absolutely parabolic, like price wise, which sounds exciting and people love to talk about price. And, we're all, not very many of us are immune to that. But I think it's exciting to see, because I like to, number go up is really fun for me to watch. And anybody that says otherwise is boring. I think number go up it's also a pretty strong indicator of adoption, right? I like to see number go up. That's what the world's watching. I call it the Bitcoin scoreboard. So when NPCs are out living their lives, they look up and they see the scoreboard. They see the Bitcoin price, right? That is how they know who's winning and who's losing. As that number continues to climb, they can see Bitcoin is winning. And so, yeah, that's kind of why I refer to it that way, because that's what normies are looking at. Normies don't care about the fundamentals. Normies don't care about the on-chain analytics. They don't care about the Lightning Network growth. They don't care about all of the businesses that are now accepting it as payment. Like all of these things, they're not really watching or interested in. But when they look up and they're distracted from their whatever NPC life they're living, and they look up and they see that price, they know what's happening. So,
I think so too.
but to kind of more hone in on the question that you're asking, I think that I think 2026, like this year, is going to be absolutely crazy. I recently said that I thought that they were going to be doing $40 billion of I'm sorry, yeah, $40 billion of volume of Bitcoin buying in a single month. I think that is going to happen.
The most important thing for your Bitcoin journey is not buying Bitcoin, but it's how to keep them. And yes, you have maybe the right tools, but how do you actually go ahead and stick it all together so it's the most secure for you personally? Self-custody is a deeply personalized journey, and the Bitcoin way is helping you exactly finding that correct setup for you personally. They are also helping you with securing your own cybersecurity. And if you want to go one step above all that, you can even get a consultation for a Plan B residency. Go to thebitcoinway.com/Robin and you will get a 30-minute free consultation. I finally and officially mine Bitcoin. This is not just something to stack more Satoshis, but it's most importantly also to support the network. Individual miners are the ones that keep the Bitcoin network decentralized. And by the way, you get KYC free Bitcoin. That's why I use Simple Mining. I get an actual proper Bitcoin miner. They set it up for me. They repair it if it breaks down. And most importantly, they let me choose the pool and even connect my own full node. I'm completely sovereign and I'm completely in control, and I can sign up with Ocean, no account needed. I just give them a Bitcoin address and then there's mining going on. No KYC, nothing. So if you're ready to mine Bitcoin, go to simplemining.io, tell them you come from Robin, and let's mine Bitcoin together. They will get to 1 million Bitcoin this year. I will be now officially on the record for that. I think they will get to from 738 to like the 1 million Bitcoin. It would highly surprise me if not. Maybe if we get a very bad bear market, they might be limited, but we already have low sentiment. We have a 50% crash, and they are buying like crazy. So great. It's just like really interesting for me to see.
So on the subject, you mentioned you had looked through some of my recent posts. I don't know if you saw the one where I reposted Michael Saylor from 2 years ago. And he projected that Strategy would be buying up to 450 Bitcoin per day at this point where we are in 2026. 450 Bitcoin, like that was his projection, right? And we're over 10 times that right now. So yeah, I think I said we're a little bit ahead of schedule, or we're way ahead of schedule. But yeah, I mean, I think we're even exceeding where Michael Saylor's expectations were 2 years ago.
Yeah, I mean, so like I'm a little more conservative on that than you maybe. I looked at how many Bitcoin they bought in 2026 so far on the confirmed side, so like since Monday. And if you like take the average, even without the trade, like I included Saturday, Sunday. So if you only take the trading days, it would be a little bit higher. But if you take every single day, they bought, I think, 974 Bitcoin, which if you take in the non-trading days, it probably is like over 1,000, maybe 1,100. But this week is crazy. And last week was way more crazy. And so if we accelerated that, man, it could be, we could actually look at a lot more Bitcoin buys and actually get to a huge number. And then the question is, how sustainable that is, and I think it's very sustainable. So will be interesting to see how many Bitcoin per day they will have at the end of Bitcoin at 2026. I'm kind of looking at like what is the realistic number of Bitcoin they are buying in 2026, and then like dividing by 365, seeing how high that number is. I could see them way over 1,000.
Yeah. I mean, it's definitely possible. Let's see. Can I share my screen? Would that be cool?
Absolutely. Yeah.
I want to share something. So let me share my window here.
By the relevant people here on the side, Adam and Michael, two absolute legends. You should follow them.
I don't think I should be in the same category, but that's I'm flattered.
You are now.
Okay. All right. So here is the Bitcoin Quant STRC tracker. This is what I want to direct your attention to. So if we look at the equivalent Bitcoin, this is set at 40%, I think 42%. So that's like statistically how much Bitcoin they've been buying based off of the volume. And so this math, if you assume this is all correct, which historically it has been, that puts us at basically, almost 10,000 Bitcoin just on Monday, Tuesday, Wednesday, and Thursday. Let's see, does that account for last week too? Anyway, what I want to draw your attention to though is these individual days. So on Monday, Stretch bought about 2,000 Bitcoin. On Monday 2,000, on Tuesday 2,600, on Wednesday 2,700, and so far today on Thursday the 12th, we're about already where we were for the full day yesterday. That's pretty cool, but that's not what that's pretty far from the number that I said just a moment ago, 4,000, 5,000, 6,000 Bitcoin per day. Like, well, where is he getting that math? We actually have to multiply each of these by 3, because what strategy is doing is they're actually buying at a ratio of 3 to 1 for MSTR ATM to STRC ATM. And so you actually multiply this by 3. That's going to give you the number of Bitcoin that they're projected to be buying on that day. So you'll see in the 8K when they file it next week that these numbers are actually going to be about 3 times higher. And so, on Tuesday, it wasn't a total of 2,600. This is just Stretch. Multiply that by 3, and that's how much they're actually getting because of the ATM that they're getting from MSTR as well. So this number here isn't 10,000. This number is 30,000. Does that make sense? Yeah.
Yeah,
So
it's great. And just for people to wonder, because I also didn't get why this is like that. I asked really stupidly, and then I found out that they want to stay at 30% amplification, and so if they only do it on Stretch, they will end up being at some point 100% over 100% amplification, because they don't have it on the MSTR side. So they actually are kind of forced to also issue the MSTR side and raise their Bitcoin too. They might go and say, maybe we raise that limit to 40% amplification or 50% amplification. I don't think they will do that, but they could do that. So that's the because I didn't get it. So maybe there's another guy like me in the audience that wonders like why they have to also do the 3x math on the MSTR side.
yeah, it's just they want to improve their risk profile. They don't want to. I mean, at some point, you start to approach. Not that we're anywhere close, but there's a lot of haters out there that will call all of this a Ponzi or a pyramid scheme, where you're basically just taking the investors' money and using that to funnel back through into other investors. And so if you were 100% amplification, I think that would potentially fit that definition. Right now it's not even close. But my point is, you have to actually, have some real Bitcoin to back up the debt. Does that make sense?
Yeah, 100%. That was fun. Anything you want to add on that topic? Just because I feel like go ahead.
And this is really important, guys. So keep in mind all this stuff that we're talking about. Honestly, it's important to the adoption and the growth and the price of Bitcoin, but these products don't offer any of the value proposition other than the price that Bitcoin does, right? So only real Bitcoin can get you, all of the things that it promises, with being, trustless and permissionless and censorship resistance, and, the guarantee of the absolute supply. These things you don't get with a stock or an equity. And so, STRC by itself doesn't fix the money and fix the world. Only Bitcoin does that from a financial perspective. And so, I'll just say, if you want the ultimate freedom and you want the upside to the price and all of that fun stuff, just buy Bitcoin. You don't need to worry about any of this stuff. But if you are, on the fiat side, maybe you're not, bought into Bitcoin yet, and you're like, I just want to get my 11.5%. First of all, I doubt you've made it 58 minutes and 30 seconds into this episode. But if you have, then that may be a good option for you to buy something like Stretch.
Yeah, also, I don't think so. If you made it so far in the episode, you might have Stretch as like a cash extension if you have a rule, for example, with your personal finances that 10% of my liquid net worth has to be in cash. You can make a thing where 7% is in actual cash, like in US dollar, euros, whatever, and then there's 3% in Stretch, which honestly is could be a nice strategy. Not that I recommend it, but like it's also worth noting that. But if you are the type of person that goes like 80% into Stretch, either you are very close to retirement, then I could potentially see it as a valuable strategy of having Stretch as the main fund, maybe some Bitcoin in self-custody, maybe some strategy to mix in there. But yeah, it highly depends on like your personal situation. Now, I didn't expect us to talk about that so long. I really want to talk about BIP 110 because people are in my DMs and in my comment section. Why don't I cover it? And so this is the time I cover it. So thank you, Adam, for doing that. What for doing that for me, so I don't have to cover it.
Yeah, I'm gonna get a lot of heat on you, I guess.
Yeah, it's but anyways, I'm just curious how you think about, like, maybe let's start with the question, why even is BIP 110 here, and how it is related to the I forgot it. How's the summer war called?
How's the what called?
The summer war, the Bitcoin war that we had in summer.
The spam wars? I don't know.
Yeah, yes, the spam war, like the core versus nots thing. Yeah. The core versus nots, yeah. How does this relate to that? And like, what's BIP 110 for you?
So I'll try to keep this like on a very high level. First of all, I'm not a Bitcoin protocol developer. I do build on Bitcoin, but I don't develop code for any of the implementations. So take everything that I say with a grain of salt. Do your own research and that sort of thing. But to kind of summarize what BIP 110 is it's kind of almost a solidification of the ideals of knots. So knots is just relay policy changes to core, basically. Knots is core with some slight, tweaks in some of the preferences. And BIP 110, fully solidifies some of, what the intent of what I believe the intent of some of the ideas with knots are into the actual implementation. And so there would be a fork. BIP 110 is technically a new version of Bitcoin. And I say that it does sound a little bit daunting, but I want to also remind everyone, like, we've had this multiple times in the past. Taproot was a soft fork, SegWit was a soft fork. And so soft forks are generally perceived as being good things for Bitcoin. It's moving Bitcoin in a direction that people agree with. Now, the alternative would be what's called a hard fork, and that is what happens when there isn't consensus and some part of the chain breaks off and the other chain essentially keeps going, right? A soft fork is more or less everybody moving together. A hard fork is a hard split. And so the BIP 110 movement is essentially people saying, we want to make these changes to Bitcoin, and we want you to basically come along with us, and we don't want anybody necessarily needing to run the old protocol the way that it was. I'm not going to get too much into the specifics, but I'll go on a kind of a high level of what BIP 110 promises and what it offers and kind of why I'm running it. I'll say one of the main reasons why people run BIP 110 is because they want to, reject a lot of the spam. They call it spam, right? I'll be fully open and transparent. I don't personally really have much of a problem with the perceived spam for a couple reasons, but the main one is like I don't actually really, I don't think I believe that spam really actually exists in Bitcoin. And I know I'm gonna get hate. I'm gonna get hate from both sides for taking a nuanced approach here. But the truth is, I think that valid Bitcoin, um, transactions, I see them as such, right? It you need another piece of software in order to interpret these transactions even as spam, right? And yes, that line has been starting to get blurred with the amount of data that people are putting on Bitcoin. So I'll say I have empathy, a lot of empathy with the people that want to get rid of the so-called spam. I hate it. Like the stuff that they're calling spam, I think that it's garbage. It's disgusting. I don't think that personally, I don't see any value in it. But that doesn't mean that I think that I should have the ability to say what somebody else sees value in, right? And if somebody's using Bitcoin in a way that I agree with, I agreed with the current implementation of Bitcoin by running a node. And so, I've already said these are the rules, and this person is playing by the rules, but they're doing something I don't like. That I don't think that that's the appropriate way to handle that. So for me, at this point, I think the appropriate way is to signal for the way that I want to see Bitcoin move, and hopefully move over to a BIP 110 version of Bitcoin into and throughout the future. And so I'm personally signaling for BIP 110, but it isn't necessarily because I think that it solves on a technical level any spam or whatever. Um, People will obviously they'll tell you, BIP 110 does not fix spam. Like you can still put this stuff on BIP 110. 100% true. It does make it harder, but again, that isn't even my argument. And that's not where I'm coming from. I have one reason, one like solid reason that I'm signaling for BIP 110 and why I want to run BIP 110. And that is simply because I don't trust Core. And I believe Core has way too much influence. So we're talking about Core, Bitcoin Core, the group that is responsible for, maintaining and developing the code that we all run on our nodes. And I think that they have outsized influence on what Bitcoin is for, the whole world. I believe that, there was a recent update that they pushed out that was controversial. It was Core version 30. So their version 30 of the protocol, the implementation, they pushed that out. There was a lot of pushback, even way before they released it. They kept getting a lot of heat, and they went forward with it anyway. And that made a lot of people mad, including me. And to me, that was a wake-up call that if they could do this, which, by the way, I'll admit, Core version 30, the changes that were made there were minor. I don't actually think that they were catastrophic to the future of Bitcoin. But what it did do for me is it woke me up and made me realize that Core could push out a lot of things that I don't agree with. And I can't stop that. And that worried me. That bothered me. I'm not currently, worried about the future of Bitcoin, but I do believe that if Core maintains its outsized influence, that could be a huge problem. And so again, my one reason for running BIP 110 is to fire Core. I just want them fired. I want them gone. We don't need one centralized group. It doesn't need to be Luke. It doesn't need to be Mechanic. It doesn't need to be Dathan Ohm. It doesn't need to be anybody. We don't need one centralized group of people that gets to decide what Bitcoin is. And right now, it looks like that's Core. And that's what I'm against. So, there's also the argument that people push back, well, you're just substituting one centralized group for another. And I don't agree with that at all. I mean, Core has been the central point of influence for a very long time. And I don't care who it is that's stepping in place to replace them. I think the best contender to do that right now is this group that's pushing BIP 110. And if they ever get into a position where they're doing things that I don't agree with, or I feel like they have outsized influence on the development and future of Bitcoin, I'll vote them out too with another BIP. I think that that's really important to Bitcoin, is for it to not be heavily influenced by one centralized group.
So it's less about the proposal itself and more about what it means for how we develop Bitcoin moving forward and the groups that are involved with that.
Yeah, 100%. So, you have Bitcoin Core, again, just this group of developers, and they've been developing on Bitcoin for, over a decade. And the vast majority of people are just blindly running their updates, right? I guess I shouldn't say blindly running. The vast majority of people are running core, and a significant portion of them are blindly running the updates, right? It's not a majority, but a lot of people are just, oh, there's an update from core, let's go ahead and install it. They're not really, in my opinion, there are a lot of people that aren't looking into really what that does or what that means. Sure, there are a lot of people who are just like, I'm not going to update, and that's fine too. But people, core is the main reference implementation right now for Bitcoin. Basically, the whole world is running off of core. So if core decides to make a change, even if it's crazy, let's just say they want to increase the supply to 100 million Bitcoins, right? They want to, create a Bitcoin foundation and fund it with, these, freely mined coins that didn't have to go through any form of proof of work or something like that, and they put that into their next update. Sure, a lot of people are going to reject it, and I'm sure it's going to be a pretty big deal. And obviously, I'm making a very exaggerated case, but if they just put that in their next update, people are destined and bound to update to that new code, even though it's bad, right? And so my point is, I think that they're kind of just slowly shifting the Overton window. They're slowly turning Bitcoin into something that I didn't sign up for when I got into Bitcoin, and I think a lot of people feel the same way. And I believe that BIP 110 is taking that power away from somebody to do that.
That's a fairly reasonable stand, I think. For me, I looked at the proposal and I looked at the whole situation, and I kind of was coming down on the side that Bitcoin will survive either way right now. Yeah. Like that's for me the standard. Like, I get why it makes a lot of people mad on both sides. But for me, I don't think in 30 years, when we look back, this will be a huge moment. It might have been a huge moment if nobody fought back and core was like, we can do whatever we want. But the fact that there was such a huge reaction of a significant amount of people and core got their feedback showed me how healthy Bitcoin is. Like that is a very healthy and good sign of Bitcoin, and makes me very I don't want to be sentimental, but it makes me proud of the Bitcoin community. To be honest, like there is something small, and it gets taken serious, and the decentralization is something people actually care about, and nodes are very, very, very important. And I think also the whole debate got people educated on running nodes. I think a lot of people that wouldn't have run a node right now are running it because this whole debate around core versus nodes and BIP 110 got kind of occurred. So I think it's a net positive. And as of standing right now, I think Bitcoin will survive no matter what happens. And that's I think it's a very healthy immune system reaction of Bitcoin.
I totally agree. I think you said that very well. I think, if anything, if BIP 110 does nothing else but make, the core community and core themselves realize that, there is a potential for them to be, quote unquote dethroned. I think that's a healthy outcome. Like that's a positive outcome. I'd be happy with that. It also motivated me. I was running a pruned node, and that's here's my old hard drive. This is just a 180 gigabyte hard drive that I was running my node on before, and it motivated me to get out and get a bigger hard drive to run a fully archival node here in my house. And so it's motivating me to step up too. And I think it's motivating other people too. I'll also say, just as this plays out, I don't care what side you're on, and I really mean that. Like, if you're on the core side, that's great. If you're on the BIP 110 side, that's great. If you're somewhere in between or something different, I don't care. I really want people to be able to run the code that they want in Bitcoin. I think that that's really important. I think that we should stop telling people what implementation they should run and just helping people understand, where they might stand. I'll say, like, if you agree with this, and this, and this, then maybe you want to run core. If you agree with this, and this, then you might want to run BIP 110, or you don't have to pick one of those two either. It's not like it's a core versus BIP 110. It's really, BIP 110 is a proposal, and then you could reject that proposal as well. But my point is, I don't like when people ostracize people for deciding to run a certain implementation. I don't have a problem with them educating them, and I think some people are doing a good job at that. But I also see a lot of bad faith people out there. I've gotten blocked by a lot of people just because I say I support BIP 110, which is absolutely crazy. But that's the fact. Like, people have essentially canceled me over it. A lot of it, I'm not even going to get into a lot of it, because a lot of it, is stuff from people that I respect, and some of them are my friends, and I hope we can be friends again someday. But that's what I want to get into. That's what I want to bring attention to, is because when the dust settles, when either this is going to activate with consensus, or it's not, we're all going to need to be friends again. And so I don't care what side you're on. If you're on the core side, or I say the core side, if you're on the not BIP 110 side or the BIP 110 side, my strong recommendation is to lay your pride aside and stick with consensus. If BIP 110 fails, if you're on the BIP 110 side, let it go, because you're going to go down with that ship. And we've seen that with, every other fork of Bitcoin. So yeah, if you're on the BIP 110 side and it fails, let's, don't go down with that sinking ship. Also, if you're on the core side and BIP 110 activates with consensus, don't try to hold on. You're going to lose everything. So stick with consensus. Wherever the consensus goes, that's where you need to go. We have many months to figure out where consensus is going, so you'll know. It's not like it's going to be a flip of a switch. At one point it will be, but you're going to have plenty of time. So don't dig your heels in. Don't lose everything. It's not worth it. Fight your battle through consensus.
A very reasonable stance, I personally believe. So we have, as you might know, an end routine in the podcast where the previous guest is asking a question for the next guest without knowing who the next guest actually is. And it's a very specific one, and very specific outside of Bitcoin. The end routine, the question is, do you think that nuclear energy could solve our energy problems?
Yes. I don't even need to think about that. Yeah, I do. Absolutely. I think nuclear energy has been suppressed. That's not even a controversial statement. But the main reason why we don't have nuclear energy as abundantly as we do right now is, I think, simply because of how effective and helpful it would be for society. I think that essentially we would have abundant, nearly free energy for everybody. And that's good for most people, but it's bad for the people that are currently in control of our energy systems. Energy infrastructure, anything in the energy sector would be disrupted by this. And so, especially in the US, the lobbyists lobby hardcore. And one thing that I have seen is the lobbyists tend to really push on the nuclear side of things along with nuclear weapons. So if you want to develop a nuclear facility, you basically have to have the same, you're basically the same classification as a nuclear weapons developer, right? So whether you're just using it for power to power, your power grid, or if you're using it to build, bombs, you're treated the same. And I think the United States has a lot of control over who is, in that camp. We're seeing a lot of this, conflict over in the Middle East right now, specifically in Iran, where we're allegedly attacking them for their nuclear weapons development. Now, how much of that is specifically for weapons? How much of it is for energy? I don't know. I'm not going to pretend to say that I know. But the fact remains, there are people, in very high places that have a lot to lose from nuclear energy development. So I think that there's a lot of talk about nuclear, becoming a little bit more mainstream lately. I'm not super optimistic that that's actually going to end up coming through to fruition. I know there's a lot of projects that are currently underway. I think they're going to be very closely monitored and regulated. And I think that we still have a long time before the free market is really going to have access to nuclear energy.
I think so too. It will take some time, but it's very pro-nuclear. Like there's like so many reasonable voices now coming out and saying good things about nuclear. It's astonishing. And I think I've never found a Bitcoiner who is against nuclear. That's also an astonishing fact, I think.
I think it's a facade, though, from the government. I don't think the government wants nuclear development. And it's for the reasons I said. I think it's the lobbyists. There's a lot of big money that doesn't want nuclear to happen. And I think yes, they're saying they're pro-nuclear, but again, I think it's a facade, and I think it's a facade potentially the same way that I think the pro-Bitcoin stance was a facade. We saw all this, we love Bitcoin, especially from the United States, first Bitcoin president. I would argue that like basically no positive has come from, the current administration stance on Bitcoin, maybe very slightly. I mean, I'm glad we freed Ross Ulbricht. That was huge. But even like the legislation, the Genius Act, for example, that we passed, I don't think that was good for Bitcoin. Feel free to disagree with me on that, but I don't think that was a pro-Bitcoin bill. They're trying to pass another bill called the Clarity Act. Again, another crypto-related bill that I don't think benefits Bitcoin. I think really what they're trying to do is they're trying to develop an environment that is conducive to a CBDC. That's what they want. They want to sell a CBDC as crypto, right? And so I think that that's really what they're trying to do, at least in the United States. They're saying, yeah, we love Bitcoin, buy my CBDC. That's kind of what I'm seeing. So
I love that you brought it up, because I personally think stablecoins is almost the same thing as a CBDC. I know there's like very fundamental differences, and it's important to highlight them. But for me, it's like CBDC, stablecoin, same thing. Like,
yeah,
like
I would take it a step further. I'd say I don't agree that there are fundamental differences. I agree that people say there are fundamental differences, but pretty much the one thing that I got. So I have been basically trash talking stable coins for years and years. I'm a stablecoin hater. But when I get some of that pushback, people will say it's not a CBDC because it's not centralized, right? It's decent. It's not. Well, let me back up. It's not a central bank, right? So the CB, central bank digital currency, DC, CBDC. So since these stable coins aren't being offered by a government central bank, they are not CBDCs. Well, fortunately, I have all the ammunition I need now to debunk that, because we have, the Palo Arduino from Tether coming out and literally saying that they want to be a central bank. Or he said they're going to be a central bank for gold, right? That was his full quote. We're going to be a central bank for gold. And so it's like you have Tether telling you that they're a central bank, and there's not much of a leg to stand on at this point. So my point is, I agree with you. Stablecoins, CBDCs, they're the same thing. They have the same risks. Don't fall into that trap.
Is then Stretch also a stablecoin?
Yeah, absolutely. Absolutely. So, yeah, I mean, my argument for that's the same. Don't buy that. Buy Bitcoin. Use Bitcoin. Like Bitcoin is we don't need anything else. You don't need a yield. Bitcoin actually just works for everything you need. It's just money. And a lot of people are trying to like play these alchemy games of trying to figure out how they can basically get free money, right? Everybody thinks that they can get free money somehow. You can invest in something and it's just going to pay you a yield that you don't, necessarily uh, need to provide any value for to continue to live your life. Like Bitcoin, yes, will appreciate over time by itself, but you don't need a yield, like a quote unquote yield. Like the Bitcoin, you can have enough Bitcoin and your yield can be the freedom. The yield can be, the purchasing power going up. But people have this like unit bias where they think they have to have a bigger number. And you don't with Bitcoin. You get to a point in Bitcoin, you have enough Bitcoin that, you could just retire off of that. You don't need something else that's going to pay you a fixed yield of, let's just say 10%, whatever it is. Like if you need, $100,000 to live, you don't need to put $1 million into this one specific product that's going to pay you 10% in the fiat world, because you're just playing the fiat game still at that point. Get out of the fiat game. Go buy Bitcoin, and it's guaranteed to appreciate more than whatever you're buying, because if it's backed by that, then if Bitcoin fails, then that other product fails too. So buy Bitcoin. That's my advice.
100% agreed. But then I never had that thought before, but I think I had a comment before saying that then we are kind of funding a stable coin when we buy MSTR kind of a thing. And MSTR kind of has the chance to be almost a central bank if they have like 2 million Bitcoin.
Yeah, so here's people might ask like, well, then why are you not as against MSTR as you are against like Tether, for example? And the one reason is because they are a public regulated company. They're, they provide full, transparency and disclosures to the SEC. They're regulated by the SEC, which means they are governed by the American people, right? They're American corporation. They have to answer to the American government, which is, constituted by the leaders that we elect, basically, right? So we as a populace, we get to decide the rules for public companies like Strategy, right? So I have control as a citizen. We collectively have control over the rules that Strategy has to abide by. That does not apply to Tether. Tether has absolutely no, no reason to answer to the American people, right? Aside from, them being able to offer their product into the American market with certain rules. But we don't get to decide, how Tether runs their business or who they're accountable to. That doesn't exist. That's the big difference. And that's why I'm not like anti-MSTR and why I am anti-Tether. And I'm not saying that Tether is inherently, evil or bad, or that they're doing anything wrong or committing fraud or anything like that. It's just that they could, and we couldn't do much to stop it.
What are your thoughts on Saylor for POTUS?
I'd vote for him probably. I mean, I've come to the point where I'm like, I don't know. I've always voted before, but I'm like starting to think like I'm getting to like this cynical point where I'm like, I'm looking and seeing like what, like it just all it all seems like one uniparty to me at this point. Democrats, Republicans, we don't really have much of a choice. And so especially right now, not to get too political, but I really don't feel like that the votes that I made are really being respected. Like the things that I voted for, I don't think that the administration is following through on. And I think they're doing quite the opposite of what I voted for. So I feel really stabbed in the back, and I've become a little bit jaded. But I'd say, if Saylor ran for president, I'd probably vote for him. Why not?
I would love to see that, not only because I then can say the president of the American States was on my podcast, but just as well, I think he would do a great job. This was a very long end routine with a lot of tantrums in there, from nuclear energy to sailor for POTUS. So thank you so much, Adam, for being on. Before I let you go, where can people find you, ask you questions, and reach out to you?
I'm at Adam Simecka on X. Yeah, thank you for having me on. Do you want my question real quick? If I can spit it out real quick for your next
Absolutely.
guest?
Do
Okay.
it.
How much of your life would you give up for one Bitcoin? Like trading time in your life for Bitcoin? 1 year, 1 month, and I mean like literal life. Like your life gets cut short by that amount. That's my question for one whole Bitcoin.
That's an interesting question. Definitely not a year. I don't know. That's crazy. That's a crazy question. I love that question. I can't wait to ask that question. It's really hard to answer. Yeah, thank you so much, Adam, for being on the podcast. How much would you give up? Like, what is your number? What is your year, month, day, or answer to that question?
0.
Not even a day?
No. Not even a day. No.
An hour?
Nope. 0.
1 second? 1 second?
I don't think so. Well, okay, maybe a second. But I think for me, it's an interesting thought experiment, because it reminds me of like, I often think like Bitcoin is the most valuable thing, like to me, like my money, but it's not. It's time with my family. Like that's what matters to me more than Bitcoin. Like there's no amount of Bitcoin that is more valuable to me than my family or my time, like my life. So yeah, I think my answer is basically pretty much 0.
I think this is an amazing point to end the podcast. So thank you so much, Adam, for being on the podcast, and also thank you so much for everyone that is watching and listening, for joining us today. As always, I'll be back. This content is for educational and entertainment purposes only and does not constitute financial advice.